Hey, what's up, everybody? It's Monday, July 6th. Hope everybody had a good 4th of July. So, what's up? Market's up. Look, it's basically 7 stocks driving this market up. 7 stocks. You got Amazon, you got Alphabet, which is Google, you have Microsoft, you have Netflix, you have. What did I say? Amazon? I think I said that. You got Tesla. Boy, Tesla, huh? How about that stock? Almost 1,400. By the way, I took profit. I got out of my Tesla stock today at around 1309. I think it ran all the way up to 1380. So yeah, you got 7 stocks. You got Amazon. You have Google. You have Microsoft. You have Netflix. You have Tesla. You have Facebook and one other. I'm forgetting it. Anyway, 7 stocks driving the NASDAQ up to new record highs every single day. The other market averages, we had that big bounce off of the March low, and that was justified. And I've talked about that the whole entire time, about why it was justified. Massive fiscal response. Virus was going to flatten out. Things were going to start opening up. But we haven't seen new highs in the S&P. We haven't seen new highs in the Dow. We haven't seen new highs in the Russell. And a lot of individual stocks, particularly some of the financials, the bank stocks, they're languishing. And all this stuff was in my report. I mean, when you look at bank residual, do you know what that is? Bank residual, that's assets minus liabilities. That's what's left over. That's literally bank wealth. Assets minus liabilities, bank wealth. That is at the lowest level in 6 months. We've seen a huge decline in that residual. Banks are precarious right now. Bank stocks. You need to see that start to pick up. I mean, would you invest in something in your neighbor if his wealth is going down? No, you wouldn't. You would invest in your neighbor if his wealth or her wealth was going up. So, precarious right now. I hope a lot of you watched my video last Friday. I gotta get this off my chest, right? They're unprinted money, like we're still not hearing anything about that. For 6 months, it took the Fed 6 months of constant daily asset purchases to increase bank reserves by $450 billion. And that whole entire time, everybody was going crazy with them. They're printing money, right? Zero hedge and all the quacks and all the goofballs, and even some, I would say, respected Wall Street analysts talking about this stuff, economists. I hate to use that word, respected, because they're jerks, they're idiots. But now in 5 weeks, they unprinted almost $500 billion. Like, hello, why isn't anyone talking about this? Folks, you can't have it both ways. Either they're printing money, and if so, then the reverse is true. When they take it away, that's unprinting. And by the way, over this last 5-week period, the market has been on fire, man. So this shows you that the whole narrative that they use to pile into stocks every time the Fed does something is wrong, and it's going to be reversed. What drove the market up was the stability given to the economy by that massive fiscal. That kept incomes stable, even though people lost their jobs. I know a lot of people who lost their job, and the unemployment benefits and the $600 extra a week and the $1,200 check, as meager as that all is compared to what corporations got, it put a lot of people in a decent position. Now, sure, it's temporary and they want to go back to work, but that was the thing. That was the thing, man. And again, we're coming into July here, and some of that fiscal support is going away. Now, interestingly, a couple of things here. Goldman today basically told their clients to lighten up on the market. They're looking for a second half slowdown based on the resurgence of virus cases, new closures, that kind of stuff. Obviously, That's going to impact the data. I'm also saying we have this fiscal cliff coming this month. Taxes next week, everybody. Got to pay your taxes. Rent payments, mortgage payments, the $600 supplemental unemployment benefits come off at the end of this month. So unless Congress does something, and by the way, Mitch McConnell said the Senate is not even going to take up any new bill until the end of the month. So we could have a big fiscal hit this month. Starting next week, by the way. Market valuation right now, if you look at earnings forecast, the market is the most overvalued it has been in about 18 years. You got to go back to 2002, 2003 to see a PE. I think we're about a 25 PE on the S&P. And by the way, you know what's interesting? In the crash in March, the coronavirus crash, we only got down to about a 17 PE. I would say that's kind of like average historical value. It's not like extreme undervaluation. So, even as vicious and as brutal as that correction was in terms of magnitude and velocity, in terms of the way we measure, valuation, at least by one standard, it didn't get that low. I mean, I think in 1978 or 77, it got down to like 7, a PE of, we're still running on that bull market from that PE of 7. Can you believe it? So that's where we are. The new edition of MMT Trader is out. Stock full of all my charts and analysis as usual. I give you insight that nobody else. Oh, there was another thing I wanted to mention. We saw in the latest CFTC data, that Commitment of Traders report, for the first time in 3 weeks, dealers in S&P futures were shorting the market aggressively in the week ending June 30th, just last week. They've been buying, they're net long. Very unusual to see dealers net long, but they rode this thing the whole way up, but they were shorting aggressively last week. So something to pay attention to. Put call ratio still very low. The only thing, from a sentiment standpoint that I could point to and say, hey, the market's going higher, is that weekly AAII sentiment survey. That's still a low level of bulls, a high level of bears, but that thing looks out 6 months. So yeah, I could definitely see 6 months down the road where the market could be a lot higher. But right now, especially what we're looking at in terms of this month, the fiscal stuff, some of that support coming out, I don't know, man. Looks a little shaky to me. Anyway, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. Here is the link right here in the description below. And hey, yeah, don't forget to listen to my podcast. And I'll be recording a new one tomorrow, but it'll probably be out on Wednesday. All right, everybody. Have a good day. See you tomorrow. Bye-bye.